Reacting to master support and resistance levels, all you need to know by the Trading Geek as an ICT trader. Let's go.
In this video, I want to show you how to correctly draw your support and resistance levels so that your charts do not look like this. Ew,
what the hell is even that?
Support and resistance or key levels are one of the most important things that you must master when trading. But 99% of traders are still getting it wrong. Why is it so important? Because if you can find key levels correctly, it can give you a high win rate trade opportunity. Look at this example right here. There is a resistance level right here because
what a broad claim. Like, it's just such a broad claim.
Price went up to this level and then reversed downwards. So the next time when price hits this level again, there is a
That's actually a liquidity sweep. So if he's about to show it going down here, well, it's probably because we swept a liquidity. And I would also ask what's to the left of this, right? Do we have a bearish fair value gap where we're, delivering off of or
very
something?
high chance that it's going to reverse downwards again, so you could have entered right here. A very common mistake that traders make is that they draw too many lines on their chart just like this. What the hell are you doing, bro? Stop doing this. How can you trade with like 10,000?
That's me about just support and resistance in general. But like, honestly, yeah, it's true. Don't ever be the one who overcrowds your charts. There's no point.
Lines on your chart. This just makes you more confused. While the whole point of drawing key levels is so that it makes it easier for us to analyze, make it less confused. The reason why a lot of you are still making stupid mistakes like this is because you do not follow the secret rules of support and resistance. The first rule is multiple rejections.
Dude, why is that secret? I feel like everybody who ever talks about resistance talks about drawing lines where there's multiple rejections. What?
In this example, price went down to this level 3 times before reversing back up, showing us multiple rejections. So we can draw a support level right here. Next, every time price went up to this level, it always rejects this level and reverses.
Yeah, every
so
time.
We can draw another resistance level right here. Now you might be wondering, what if the chart looks like this when there is no multiple rejections yet? Glad you asked.
Second inversion gap looks bearish, right? You'd enter shorts right here and then price set stop to break even at this internal low. We've also swept out a lot of trendline liquidity. Nice.
Which brings us to the next rule. Price needs to move away from the swing low or swing high. In this example,
well, yeah, is that not the same thing as multiple rejections? What's the difference? So secret that you had to say the first rule twice. Cool.
Swing low or swing high. In this example, you can see that price has not formed multiple rejections yet, but you can see that it has formed a swing high and moved away from it. And when it just moves away and reverse and head back down, it doesn't just move a tiny bit, it moves significantly. So what you can do is that you can draw a resistance level right here.
Why would you draw it right there? What's the point in drawing it right there?
Draw a resistance level.
What's the point of drawing it right here? Why wouldn't you draw it at the high of the wick?
Right here. Here's another example. You can see that price has been going down. It has just been a downtrend, and then it went back down to this area right here and then reversed and shoot back up significantly. So what you can do in this case is that you can draw a support level at this swing low. The next rule is that a level can be both support and resistance. Support can become resistance and resistance can become support. You can draw like a support level right here because price reversed 3 times.
Yeah, I mean, I'll tell you right now what's going on in this. We have this level. We swept the low right here, right? We're delivering out of a bullish fair value gap to the left, so we made a move up, and now we displace downwards, break structure. And no, we're not getting rejected at the old support that's turned resistance. We're actually just getting rejected by this massive bearish fair value gap right here. And the problem is, right, if you draw this line right here, a lot of support and resistance traders will see this area and this area and think, oh, I'm going to go long because we're basing above support, which is taught to be a bullish thing, right? They ignore and miss the fact, because they don't understand the concept, that we are trading inside of a massive bearish fair value gap, and that's why we continue downward. But they're going to go long right here, get completely cooked, right? They don't know we're in a bearish fair value gap. That's why you got to know these things.
And whenever price come back down to this area, it always shoot back up. So there's a very strong support level right here. And look at what price did when price break through this support level. It came back up to retest this support level, and now your support level...
No, it displaced and came to trade back into the bearish fair value gap to continue downwards. Remember, market moves from external to internal to external.
Level is acting as your resistance level. You can see right now, price is unable to break past this resistance level, which used to be the support level. Next, the levels must be near the current price. When you are marking a key level, you don't want to be marking one that is way too far away from where price currently is right now, like these 2 levels right here. These 2 levels, they are irrelevant. There is no point in drawing them because we only want to draw the levels that matters right now. Because remember, too many lines will look too confusing for us. So in this case, what I will do is that I will just draw a support level right here. You can see whenever price comes back down here, you always reverse and hit back up. And then I will also draw another resistance level right here. So these 2 key levels are the only key levels that matter. Now that you have understood these 4 secret rules, let's apply whatever you just learned to the charts. So in this example, I can draw a resistance level right here because whenever price comes back up here, it always
Yeah, I mean, whenever price comes back up here, it always what?
reverses.
It always reverses. Okay, yeah, that's not why though. Like this, actually, there's a good explanation for this. Okay, so see how drawing this little gray box would get you cooked if you tried to short right here. You know, you just blindly short, and then we close above it, so you think we're bullish now, and then we have this big wick. So at one point, this bearish candle was obviously bullish, hence the wick, which means you would have gotten completely shaken out right there, and then we get the rejection. Well, what actually happened here? Okay, well, to the left, I don't know, maybe my face cam's covering it, we have a bearish fair value gap, and we also have these relative equal highs inside of it, right? Now we end up running all those stops at once, sweeping it, and then we get an inversion model. That's a stem right there, right? We're delivering out of a fair value gap. We've swept the relative equal highs. We get this inversion on this big impulsive displacement candle, and then you short down to the swing low, okay? And it would have even worked. It would have gone farther. Now, why are these relative equal highs? Just a little educational section in here. When he's explaining these unquantifiable support and resistance things that just don't work, but really that's just a stem playing out, an ICT concept, okay? That this is relative equal highs. And the reason these are relative equal highs is because this high was higher than this high, okay? If this high was higher, that would have meant this was the run on stops and we would have no reason to trade back up here. But since this was a lower high, we have this clump of liquidity here, and it's all still open, and then we run it all at once in reverse.
This shows us that there is
Pretty
multiple
simple,
rejections. So this is a very strong resistance level. And the reason I draw it right there is because it is also near our current price. It's not too far away, like all the way up here, right? It is near our current price, so we still have to take into account this resistance level. And then you can also see it right here. This is when price moved away significantly from
that's manipulation. That's a liquidity sweep, to be honest.
our swing high. And I can also draw another support level right here because whenever price comes back down here, it always reverses, and this just shows us that this is a very strong support level because there is multiple rejections
really
at this level. And then at this point of time, this is when price has finally broken through our support level, and look at what price did. It come back up here to retest this support level, which now act as your resistance level. And guys, I want you to know that this entire area here is your support area. Alright, remember, support and resistance, they are not just one line like this. Alright, this entire area here is a support area. That's why you can see when price come back up to retest this, it does not come up to retest like a level like this. It came back up to retest an area. So you can see price went back up and reject
what?
this.
It came back to retest a what?
It does not come up to retest like a level like this. It came back up to retest an area. So
Oh shit. Wait, is that just him saying area? I'm not even trying to troll. I just did not understand what he was saying.
you can see price went back up and reject this entire resistance area which was previously supports. Here's another example. You can see that there is multiple rejections right here because whenever price come back down here, it always end up reversing and heading back up. Come back down, reverse and head back up. So, and then there is also a resistance area right here, right? So it's clear as day that this is a resistance area and this is a support area. Because
What is clear as day is that that's a bearish fair value gap that we have, and we have a high inside of it, and then we come back up to sweep the high inside of it, but never invert the bearish gap, and that's our rejection. Plus, we have a bullish fair value gap impulse move on the way up that we invert, which would give you a short entry right here. So you go all the way down, you take it down to the swing low, and this swing low, right, because these are relative equal lows, they both want to get ran at once, and so we run the first one, fake out, manipulate back to the upside, and then finally come down to run the second. Stem model explained instead of support and resistance in a much more logical manner with 4 actual steps, right? You have the sweep of liquidity, you have the delivery off of this bearish fair value gap right here, you have the inversion and its strong momentum. It's way easier, guys, I'm telling you. Dude, like, this is so obscure.
it fully just satisfied the rules that we just talked about. But do you want to mark a level that is right here? No, because that is not where price.
I would totally mark that. That seems like a significant fair value gap, a bullish fair value gap. This is the daily chart as well. I know my face cam's covering it, but yeah, I'd absolutely mark this. I don't know
Price currently is, so it's irrelevant. It's way too far away from us right now. It's ancient history. It's dinosaurs, all right? So we do not need to care about these levels that are like 10 years ago or even 1 year ago, I don't know, a few months ago. You don't need to care about those levels, all right? I really want you to focus on where price is right now. Focus on drawing the most recent key levels like this. The only time when I will draw this support level right here is when price break through this support level and it's like going down. Then that is when I will draw this support level.
Man,
but
you had it right the first time on this bullish gap. Now you've just shifted it all the way down to a completely useless level. I mean, I guess this wick right here, that's a swing low you want to mark, but why do you need the whole box? You could just draw a line at this wick.
If it's still within this consolidation, within this area, you should not be drawing key levels that is like way far away from the current price. Now that you have learned how to identify support and resistance levels, how do you actually trade them? Glad you ask. So in this example, I have marked up a resistance level right around this area because whenever price gets up there, it always gets rejected and hit back down. So
why always with this always? That's predictive.
this is clearly a very strong resistance
You
area.
need to be
So the first thing you want to
reacting. The support resistance stuff, it just seems so predictive the way he's explaining it, which is harmful.
look out for at this key level is to see what price is doing. Is price going to break past this level, or is it going to reverse and head back down at this resistance level? So in this case, price actually gave us an evening star candlestick pattern, which is basically a reversal pattern that tell us that there is a lot of sellers in the market right now. It's no longer an uptrend and price is going to reverse and go back down. And by the way, there are literally like hundreds of reversal candlestick patterns out there. So
Right, which is why you don't need to know all of these or really any of them. Just find more of a quantifiable model.
you can just choose whatever you like. But for me, I just love the evening star candlestick pattern because it's so easy to identify, and I see this candlestick pattern at this key resistance level. That is the first sign that tells me that price is reversing. But we do not want to enter here yet. We don't want to enter immediately when we see an evening star. We want to wait for multiple confluences, right? We need other confirmation that tell us that price is really going to reverse and head back down. The next thing that I saw at this resistance level is the moving average crossover. That is the next confirmation. So you can see previously right around this area, price has been above the moving.
No, it really hasn't. We had a breakdown right here. We had a breakdown right here. We had a breakdown right here. We've had like 5-6 breakdowns before the one that you magically perfectly called short. Yeah, I mean, once again, just using an example to fit your narrative, but all these, we had several breakdowns, right? We had a fairly bearish reaction here.
Average. You can see all the candlesticks are just like above the moving average. But right now, at this point of time, the moving average has crossed over.
But
So
this is like the 7th time it's happened in the last, whatever, 50 candles. Like, why this one, man?
this is what we call the moving average crossover. You can see right now the moving average is above the candlesticks now. So that's the second confirmation that tells us that price is reversing. So what I will do is that I will enter for a sell position right here when I see the moving average crossover, the evening star reversal candlestick pattern, and price is at a key resistance level. I got the 3 confirmation that I need, so I will enter for a sell right here. And I'll place my stop loss above this resistance level here. And guys, remember, you do not want to place your stop loss super duper tight like this because there is always a chance that price is going to go back up to this area and retest it before heading back down. So you want to give your stop loss a little bit of breathing room. And if you guys know me, you will know that I place my take profit at the next key level. So the next key level is all the way down here. The reason I marked up this as a key level is because if
I'm gonna speed this up a bit, I can't lie. This is becoming like low-key brain rot. I just feel like he's just picking and choosing the example that fits his narrative, right? Like, as if you just would perfectly know to time this one right here, and you wouldn't have taken any of these breakdowns that all failed.
look towards the left, it used to be a resistance
Which
level.
also were in this so-called resistance zone, right? Like, this was down in the resistance zone, breakdown, resistance zone, breakdown, resistance zone, breakdown. You just, like, trying to fit the narrative way too heavily here, dude.
See right here, it used to be a resistance level, and now it's probably going to act as your support. So that would be by take profit. And as you can see, the trade literally went down and smashed our take profit, and right now you have made a whole lot of money. Don't worry if you still do not get it. Here's another example. You can see that right now price is at this major support area right here. But we do not want to enter immediately when price is at this support level. We want to wait for our confirmation. We need 3 confirmation before we enter for the trade. And right now we only have 1 confirmation, which is price is at this support level. That's the only confirmation that we have. So we cannot just enter based on that. So right now we still be patient and wait. So you see, like right now, the next candlestick price shown us is a bullish engulfing candlestick, a big fat green candlestick at this support level. What does that mean? That means that there is.
If it was this simple, like I'm telling you, there's another one right here. So like, why not that one, right? It's just once again trying to fit the narrative.
Of buyers at this key support level pushing the price up. This shows us that price is not going to break past this strong support level, and that's a second confirmation. The third confirmation is this moving average crossover. You can see at this point of time, the yellow line, the moving average, is going to go below the candlesticks now. So now that we have our 3 confirmation,
I feel like there's way too much subjectivity to this, and he's just picking examples that fit his narrative, and that's kind of why, like, I always pride myself on teaching a very quantifiable, objective 4-step trading strategy, which I teach it on all my other videos, right? I teach it in my free Discord, no credit card, no email. Come in there and trade with me live several times a week if you want to. But yeah, I teach the STIM model, right? The ICT STIM model, which is a sweep, tap, inversion, momentum. I've already talked about it in this video. It's basically just a model where you want to sweep out liquidity, be delivering off a higher time frame fair value gap, invert on a lower time frame of your choice, and then have good momentum while doing it. All quantifiable, like very yes or no things, right? If you can yes or no, did this happen? Yes or no. But in this example, there's too many variables, right? He's talking about hundreds of different candlesticks, or hundreds of different candlesticks that he looks for. Just way too overcomplicated in the worst ways and then oversimplified in the worst as well. It's at the same time somehow.
For a buy right here. And I'll place my stop loss once again below this support level. And I can't really see because my camera is in the way. Yep, so I'll place my stop loss below this key support level and place my take profit all the way up at the next key level, which is this resistance level
No partials,
right here.
dude?
And once again,
there's two massive bearish fair value gaps here. You should probably take partials.
this resistance level because if you look towards the left, you'll see that
He's got plot armor because this is hindsight, so the trade is, this example is going to run right up to his target, isn't it?
used to be a support level right here. Whenever it come back down here, it always reverses, come back down, reverses. So it used to be a support level, and right now I'm expecting it to become a resistance level. Now let's look at how this trade will play out. I'm just gonna fast forward this thing so that I don't waste your time. And you can see like price just going up and going up, going to our take profit, and we just wait, be patient, and bam, we just smash our take profit right here, boys, and we have closed.
He's got total plot armor. Smash that TP, bro. Let's go. Let's fucking go. Trading geek. This guy gets it.
The trade. Yup, it's really just as simple as that. Like this video if this video.
It's really as simple as that. Just buy at a random line you draw on the chart and you're going to be good, bro. Just wait for a big green candle and then get in. Oh my god, man. Yeah, I don't even have much else to say. Like, this video, it's another one of those where I feel like it's oversimplified to the point where you might actually be worse off after watching this as a beginner trader. But I'm not even trying to hate, that's just my opinion.
Was helpful, and smash on that subscribe button. And if you want to take this strategy to the next level, you need to combine this strategy with candlesticks, and you can check out how to do that.
What do you mean combine the strategy with candlesticks? Candlesticks were what you were talking about this entire video. Is that not the combination? What other combination do you need? I mean, candlesticks are what's on the chart to begin with, so every trading strategy is inherently combined with them. What?
In this video right here, welcome to the tribe, and remember, you're just one trade away. Mwah.
Dude, are we serious? That's how he ended it?
I became a profitable.
Okay, bro. Oh, anyway. Yeah, if you guys are still watching, you're probably serious about trading. Oh my, I can't get over that ending, bro. But if you guys are still watching, yeah, you're probably serious about trading. If that's the case, make sure to like and subscribe. I post other reaction videos. I post a lot more educational content, so make sure to like and subscribe. Stick around for more. And also, make sure to join my free Discord linked in my YouTube bio. It is free. No credit card, no email. Literally just click the link and you're in. And with that being said, appreciate you all. Catch you in the next one. Peace.